Hey, what's up you guys? Welcome back. So I thought we'd do something completely different today. So today I'm going completely off script, so I don't have a script prepared for this video at all. I still have my iPad with me though, and as you can see, it's just a list of stocks in front of that I have in front of me. And what we're gonna do today is I'm just gonna go through my list of all the stocks that I'm watching, and there's about 40 or so stocks that are on this list. So yeah, we'll just be going through this list, and you guys can see what kind of industries that I'm paying attention to, or what kind of companies that I'm paying attention to. Now, I don't own all of these stocks, by the way. In fact, some of these might even be stocks that I'm negative on, right? Or I'm bearish on. So we're just going to go through them one by one. I have no idea how long this video is going to take, by the way. So sorry if this video is like half an hour. We're going to go through them one by one, and I'll just tell you whether I own them, whether I'm bullish or bearish, or just general thoughts that I have surrounding the company in general. So if you guys like the idea, be sure to give this video a thumbs up, by the way. It really does help with the YouTube algorithm. And yeah, we'll get started. So number one I have on my list is Airbnb, ticker symbol ABNB. You guys all know Airbnb. I don't need to introduce this one to you guys. Basically, this one I consider more of a recovery stock. I'm not really like too fond of recovery stocks right now, just because we still have the Delta variant of the virus still going around. So yeah, I'm not really too keen on going super heavy into recovery stocks. And plus, recovery stocks are not exactly what I would like to call cheap these days anyways, right? So don't get me wrong, I love Airbnb, and I really thought about buying the IPO when it first came out, but I just didn't have the spare cash on me. And then it's run up quite a bit since the IPO. I think that the IPO was around like 140-ish or something. Yeah, it's now trading at 170 or so. So this is one that I'm just watching on the side, and I might dip my toes in eventually, but yeah, this one's kind of hard for me, guys. I really love the business. I love the idea. But right now, I think it's just not a good time, right? I'm seeing other opportunities, and I'd rather invest my money elsewhere for now. Now, if you manage to get in to Airbnb when it was low, around the IPO price or even lower, that would have been great, right? That would have been a great time for you, and obviously you're laughing all the way to the bank. But right now, I think it might be a little bit too high for me to get in at the moment once again. So yeah, that's number one. And then let's quickly move on because they got like 40, okay? So number two on the list, and these are in alphabetical order, by the way, by the ticker. So number two on the list is Air Canada, AC.TO. So the .TO is just how Yahoo represents it. It means that it's listed on the Toronto Exchange, but I'm pretty sure Air Canada is also listed in America if you guys can only invest in American companies, right? So yeah, anyways, Air Canada is another obviously recovery stock. It's the biggest airline in Canada. I think you guys know what Air Canada is, right? So this one has also gone up quite a bit back to where it was like previously, or not where it was previously, but like it's gone up quite a bit from its lows is what I'm trying to say. So I think at its lowest point, it hit like $12 or $13 Canadian. Yeah, like low double digits, and it's like pretty much doubled since the lows. Yeah, it is quite a bit far off from the peak. But once again, this is airlines is like kind of like a no touch for me at the moment. So I get it. Like it's a great industry, and people are always going to travel, right? It's not like all airlines are going to go bankrupt. That's not what I'm trying to say. But with airlines, it's always tough unless it drops really hard. Unless it drops to like, I don't know, 15 or something dollars Canadian. I really have a hard time picturing me going into this stock again. As you guys know, I did own this stock before, and I sold out at just around this price, right? $23, $24 per share. And I bought in at like 15. So I made quite a tidy profit. Yeah, it's just, I'm not looking to get back into that one for now. Okay, moving on. Number three, we have Affirm. AFRM is the ticker. And Affirm is what you call a buy now, pay later service, right? So they own what's called PayBright, which is one of the biggest like buy now pay later like brands. And then they also work with Apple, right? So if you, I know the iPhone just came out, like the new iPhone, and then all that like new Apple devices, Apple Watch and whatnot. So if you're looking in the market to buy a new Apple product, but you don't have all the funds available to you right now, well, you can buy now and pay later. Not that I recommend anyone to do it, because you are like kind of getting yourself into debt, and sometimes there are interest rates, right? So if your credit score is good, you can get a 0% APR financing deal, but sometimes they do also offer deals for like, I don't know, like 10% interest or like 5% interest or something like that, if you don't have that good of a credit score, or if the company who's selling the product doesn't support it, right? So Affirm I really like the idea, and this is a stock that has just been running, right? So if you look at the chart, it's been running like crazy, and I know a lot of you who watch this channel also watch Meet Kevin. So this is one of the stocks that he's heavily invested into, but I just think that it's might be a little bit too late to get into it right at the moment at $140 something a share. I just think that is a little bit too high and too much hype surrounding it right now. So, personally, I would wait until later. If I were to like just to see if the stock would pull back a bit before I commit to jumping in. All right, so next stock we have on the list is AMC. So this one obviously needs no introduction. AMC is one of the most popular stocks among the Wall Street bets community, right alongside GME, right? So AMC and GME is going to be coming up later on the list too, right? By the way, so AMC, what do I think about AMC? Well, I absolutely, wow, that was hard to say. I absolutely love the company, but I just think like the meme stocks aren't really for me, right? I don't really go chasing the hype. I don't go chasing the trends. So, if AMC was still around like less than $10 per share, sure, I'll take a gamble, right? But right now, I just think that there's so much like hype built into it. I'm not really interested in like kind of just chasing the trend and whatnot. Don't get me wrong, I support the Wall Street bets, apes as they call themselves, right? So I support the ape community, but I can't see myself just like going into this one the same way that some other people have. But hey, if you're into this stock, all the power to you. I fully support you. But it's just not something that I would participate in at the moment. So maybe for like a quick day trade or something eventually, but yeah, not for now. Okay, so next stock we have on the list is AMD. So AMD is it's one of my like biggest missed opportunities, I gotta say. So I saw this stock and I knew about this stock back when it was like $12 per share when Ryzen first came out. And I remember Linus Tech Tips actually did a video on AMD, and he actually gave like such a glowing review of Ryzen, and he said that he was interested in buying the stock. I don't know if he actually did or not, but if he had bought the stock, he would have made like almost the 10x, because it was around like $12 or $15 a share, somewhere like that, in the low teens when he made that video. So yeah, I think that AMD is just one of the most revolutionary companies. Their CEO, Lisa Su, she's one of the best CEOs just of all time, in my opinion. So I absolutely love AMD, but it's a stock that's always been a little bit too hot to touch. I mean, you'll probably notice a trend by now that I'm saying that, like, it sounds like I'm saying everything's overvalued and everything's like too hot to touch for me. Don't mind me. I'm just like a very conservative person, or a very conservative investor, right? So again, I don't go chasing the hypes. I don't go chasing the meme stocks or the momentum plays. And AMD is, I wouldn't really call it a meme stock, but it is like super hot right now, right? So, I mean, if there was a big pullback on AMD, I would love to pick up some AMD shares just because I think that this is one of the absolutely most like interesting companies to me. But at $100 a share though, it's a little bit too hot for me to touch once again. Next up, we have AVPoint. AVPT is the ticker symbol. And I used to be invested in AVPoint as well. I managed to sell my shares at like $15 a share, and I like bought in at like 11 or something. So I made quite a decent profit off of this, and I'm glad I sold the shares because the stock just kind of crashed along with other SPACs. But I think that AvePoint, from what I understand of the company, they are one of the better companies or the better SPACs that have completed their merger. So I still think that they do have like a bright future ahead of them. They do like software, by the way. So they do like data management software for Microsoft is one of their biggest clients. Moving on, the next up we have BA, the Boeing Company. So you guys know Boeing, right? They make planes and they make defense stuff as well. So this stock used to be like $400 a share, but then because of the pandemic and everything that has happened, the stock kind of dropped a lot, especially because of their Boeing 737 Max crisis as well. So yeah, this is a stock that has been beaten down a lot, and I think that Boeing is one of those like companies that used to be so great before, but they kind of just lost their way. And I've seen interviews, I've read articles about former Boeing employees that are just like trashing the company, saying that like they don't focus on engineering, it's become too bureaucratic, it's so like managerial as opposed to innovative, right? So this is a stock that has suffered a lot, and you can tell in the stock price, right? And before, arguably, the only reason why it was like $400 before is arguably that they did a ton of like share buybacks and stuff like that. So not a great track record recently for Boeing. However, Boeing's not going away, guys. Okay, so there's just no way, especially because they're involved in defense as well. So the United States government is not going to stop pouring money into defense anytime soon, right? And Boeing is like the most American company that anyone can think of, right? So Boeing's not going to go bankrupt. They're not going to go away. If anything, if things really go bad, they're going to get bailed out. But I just think that Boeing, the biggest risk with investing in Boeing right now is just that you put your money in and the stock just goes nowhere for like the next 5 years, right? So that's kind of the biggest risk. So it's kind of like a low risk, low reward play, unless you really do think that they're going to go back to like $400 a share, unless you think that they're going to pick up the pace of innovation again and kind of engineer their way out of the problem. But until I see any like huge like signs that they're turning around, personally, I'm just watching this on the side. If the stock crashes to like, what was it, like $100 a share or something crazy like that during the March 2020 crash, if it does get to that level again, of course, I'll be interested. Anything is interesting for the right price, right? But for now, I'm just at like $220 a share or so. I'm just watching Boeing. Okay, so next stock we have BlackBerry, ticker symbol BB, and BlackBerry is it's one of those meme stocks once again. So they used to be kind of the biggest player in the cell phone space, and now they got rid of their cell phone department altogether, and they're exclusively kind of focusing on software now. I made a video about BlackBerry a while ago, and they do have some very exciting stuff going on. And I was invested in BlackBerry for a while, but I sold my shares at a small loss actually. So I sold my shares because I kind of realized that they will have to kind of it will be a long time before they're able to kind of realize any of the profits that they will make from those projects that I was talking about if they're successful, right? So it's kind of like a huge risk to like hold BlackBerry stock because you don't know if the stuff that they're working on is going to pan out. It sounds very exciting, I admit, but I thought about it and I was like, I'll reinvest in BlackBerry once I see signs that their projects and stuff that they're working on are actually succeeding, right? So yeah, I think that it was a little bit of a mistake for me to go into BlackBerry, and especially because I went into it during like the hype phase, I bought this stock for like higher than what it is now, right? So I'm glad I sold out a little bit early. I took a small loss on it, maybe like a 10% loss. I think that was a little bit of a mistake on my part. So I admit responsibility for that. I hope BlackBerry succeeds though. I really am excited for the stuff that they're working on, like I said, but we'll just have to see if it actually comes to fruition. So next up we have Bed Bath & Beyond, BBBY, and this is another stock that I'm paying attention to because this is one of the most heavily shorted stocks, right? So back during the GME crisis in like January and February, everyone's looking for stocks that are heavily shorted, and BBY or BBBY, Bed Bath & Beyond, is one of the most heavily shorted stocks on Wall Street. So I think that they could turn their business around. Of course, their business has been suffering because no one goes to like Bed Bath & Beyond anymore. I mean, come on, right? But does that mean that the company is going to go bankrupt and they deserve to be shorted like that? I don't think so, right? Because I think at one point the stock was like, well, it's got to be like 40 or 50% short, something like that. It was something ridiculous, right? So yeah, I think that this is just one that I'm watching because it does has the potential to just go on a bull run like crazy, right? So everyone thought that GME and AMC and all these companies were dead, and everyone just shorted them to hell, but then they came right back, right? So I think Bed Bath & Beyond is another candidate for like mother of all short squeezes, or MOAS, as the Wall Street Bets community calls it, right? So that's just one I'm watching closely. I don't have any Bed Bath & Beyond shares, but it's just on my list. And I wouldn't be surprised if one day it does go on a massive short squeeze, but like, again, not financial advice. If you're investing in this company, I bet that's what you're hoping for, right? But we'll see. Next up, moving on, Berkshire Hathaway is the next stock, BRK-B. Now I could have put BRK-A as well, but I can't afford BRK-A obviously because it's like $300 something, $300,000 something per share. Versus BRK-B is less than $300 per share. So this is Warren Buffett's company, obviously. So it's kind of like a ETF almost, right? Because they own a whole ton of different companies. And I'm not going to bother going through the list because there's like a billion, but their most heavily invested company is Apple, right? So they own things like Apple. They own a lot of American banks. They own just like kind of consumer staples or like stable companies, infrastructure related companies, like finance related companies. It's Warren Buffett, right? You guys know Warren Buffett's style and you know what kind of stuff that he's into. So it's just kind of my idea of having like, it's just having this stock is just kind of my idea of like, instead of throwing money into an ETF, why not just buy Berkshire Hathaway? You get to diversify your money automatically, and you get one of the best asset managers in the world, Warren Buffett, behind your picks, right? Or which are not your picks, which are his picks. But you get the point, right? So I don't own any Berkshire Hathaway though, because I did own it before I sold it. And the reason why I sold it is because I just think that, despite Warren Buffett being one of the best asset managers in the world, he hasn't really performed that well in recent times. And I think that the reason is because he's missing a huge piece of the puzzle of investing in like the 21st century, which is a focus on innovation, right? So this is one of the things that Cathie Wood talks about all the time, focus on innovation. And I think investing in Apple was like the most like crazy thing that Warren Buffett ever did, and that made him a lot of money. But I really wanted to see more of that like focus on innovation from Warren Buffett, from Berkshire Hathaway. So I would have liked to see him invest in companies like Tesla, for example, right? I think Tesla was a huge missed opportunity from Warren Buffett. And the reason why he didn't invest in Tesla is because he can't understand Tesla, right? Tesla has like so many things going on, like autonomous driving, like algorithms, like AI, robotics. It's not just a car company, right? So of course the car company, electric vehicles, is like kind of their bread and butter right now. But I think that, with all the stuff that's going on with Tesla, like it's just hard for someone who's in their like 80s and 90s to like wrap their head around, right? So I think that's the biggest problem with Buffett recently. And I just would rather just sell out of my Berkshire Hathaway and put the money into something that's more innovative, like Tesla, for example, right? It doesn't have to be Tesla. As you know, Bitcoin is also one of my other biggest investments in my portfolio, and Warren Buffett hates Bitcoin, right? So he's obviously never gonna come around to it, and he's like, 90 years old. He's not gonna like all of a sudden be like, oh, I understand how Bitcoin works, I'm gonna diversify into Bitcoin. It's not gonna happen, right? He's obviously never gonna change his mind, and I just think that that's kind of a shame, because Bitcoin is also one of those technologies that I feel super optimistic on, that I really love. So yeah, that's why I would rather sell Berkshire Hathaway and diversify my money into Tesla and Bitcoin and things like that. But to each their own, right? Again, this video is not a financial advice. You do you, but that's just how I chose to allocate my portfolio. Anyways, moving on. The next stock is BYND, which is Beyond Meats. So this is a company that I also had shares before that I made decent profits on, that I decided to sell right around where the stock is now, actually, like around $100. And I think I bought in at like $80, $90, something like that. So I made like a quite decent return on that as well, like more than 10%. And the reason why I sold Beyond Meat is because I really think that their product could use some improvement, right? Don't get me wrong, their product, it doesn't taste bad. But after I've had other products like Impossible Foods, for example, I have the Impossible Burger. I just think that Beyond Meat, it doesn't even like, it comes close, kind of, right? Like, but you can definitely tell that there's a significant difference between Impossible Foods and Beyond Meat, right? So I think that Beyond really pushed like kind of the scale, right? They try to get into every grocery store, and I'm pretty sure every grocery store in Canada has at least one Beyond Meat product now. So they've done a really successful job at that. But I really think that in order to succeed in the food business, your food has to taste good, like at the end of the day, right? So I just think that if Impossible were to IPO, Impossible is not a publicly traded company, unfortunately, they're private. Otherwise, I would invest in Impossible. I could always invest in companies that are not number one, and sometimes I do, but I really prefer to invest in companies that are number one, right? So I understand the valuation argument that, like, if you're investing in the number one leader in the industry, you're probably going to have to pay a premium for the valuation. But I'm completely okay with that, actually. So think of it as like Tesla versus Ford, right? So I know a lot of people, a lot of you watching might even own Ford stock, and all the power to you if you do. But for me, I'd rather own Tesla than Ford, even though Tesla's valued at like so much higher than Ford, from like Ford PE, price of sales, things like that, right? But I'd rather be in the leader than be in like a second place that's doing mediocrely but has a low valuation, right? So that's just my opinion. Anyways, moving on. The next stock is CCL, Carnival Cruise. You guys know all about CCL. This was also a company that I played as a recovery stock back during the midst of the pandemic when it first took off. And I bought in the stock at around like, I think it was like $12 a share, which was like really, really low. And then I sold at around $20 a share. So I sold, I think, slightly lower than what it is trading now. Again, this is a stock that I'm watching closely, but I have no plans of getting back into it unless like, it drops really heavily again. And the reason why I don't want to get back into it is because it's just one of those things where they are a company that took on a lot of debt during the pandemic, okay? So I think that I remember them like issuing senior notes, which are like bonds, for like 12% interest or something like that, if I remember correctly. So they had to issue a bunch of these like senior notes with insanely high interest rates back when the pandemic first started, just to prevent themselves from going bankrupt. So that effect is gonna kind of carry with them for a long time, in my opinion. And the fact that the stock is at like $20 or above $20 again, it's just a little rich, in my opinion, for this stock, even despite the fact that it's still down quite significantly from pre-pandemic levels. But these like companies like Carnival Cruise and whatnot, they're completely different after the pandemic, right? So you can't use pre-pandemic measures to evaluate them. And you're like, oh, if they go back to like $50 a share again or something, I'll make a ton of profit, right? Because the pandemic's going to be over. Well, they still have to deal with the debt that they took on, right? So yeah, it's going to be a rough time for companies like Carnival Cruise. So that's why I'm just keeping that on my watch list, but I'm not going to invest in them anytime soon unless it drops. Okay, so next one, we have CleanSpark, CLSK. And this is a company that I recently just came on my radar. And this is a small grid technology company and also a Bitcoin miner. So they do both, right? So small grids, they do like electric, grid technology, but they've recently also got into mining Bitcoin. And I saw a video from, I think, James from Invest Answers, where he did a really deep dive on evaluating all the different Bitcoin miners. He compared like Hut 8 to CleanSpark, to Bitfarms, and to all these like Marathon and Riot. So after that video, CleanSpark came out on top. I haven't bought into this one, but this is one that I'm watching closely as well. So moving on, next up we have Coinbase. So Coinbase, as you guys know, is one of my biggest investments of all time, just number 2 now, beneath Tesla, right? In terms of stocks. Of course, I haven't evaluated it against like my Bitcoin position. It's not as big as my Bitcoin position, but like it's like number 2 on my list in terms of stocks. So Coinbase, as you guys know, they're the biggest crypto exchange, crypto company in America. And they recently just IPO'd, and I really think that this could be like an $800 per share stock. I didn't just pull that number out of my behind, by the way. So when before this stock came out as an IPO, Meet Kevin actually did an in-depth analysis on it. So I recommend you all watch it if you haven't already. But yeah, he did a deep dive into it, and I really think that this stock can hit like the relatively bullish targets of around $800 per share. And this is just by looking at like kind of the cash flow, and this is one of the most profitable companies, by the way, in the world. Okay, Coinbase, and they made like $1 billion in a quarter or something. It's absolutely insane, and it's just going up and up. So yeah, Coinbase is one of my favorite stocks, and granted, this one hasn't done that well since the IPO, but that doesn't matter for me now. I think that it's just Wall Street doesn't understand Coinbase, but eventually I do believe that it will start to skyrocket. So yeah, I'm just kind of averaging down and biding my time until that day comes. Hey, Andy from the future here. So thank you for watching part 1 of my watch list video. I had to cut it short because it got way too long. So I'm gonna end part 1 here. So part 2 will be coming out very shortly. So stay tuned on this channel, and be sure to hit that like button if you haven't hit the like button already, and be sure to subscribe if you haven't already. So I'll see you guys in part 2.